All right. So let's move on now to my favorite topic, partnerships. Oh gosh, you guys, you have to be reminding me to slow down. You can see I could probably talk about these things all day long. Jeez, because I live and breathe these things. And I apologize because I think this session is going to go a little bit longer today because I want to touch on some very important things when it comes to partnerships. Okay. Today's session, I wanted to talk about how to structure a partnership, but I feel like there's so many things that people don't even have conversations about that causes them to resent each other down the road, leading to their business just being abandoned or just dropped all the way, which is unfortunate. I at our firm, we register businesses. I'm sure you guys already know that. But when it comes to partnerships, we don't register your partnership without having a session with you and your partner, because it's very important for us to ask you guys the difficult questions. If you don't have clarity on certain things, I promise you, it's going to come back and haunt you. Like if your partnership, you're supposed to get a loan, whose name will it be in? And if one person has to leave without paying the loan, who carries it? And how do you ensure that the other person pays their share, right? Those are the things we're talking about. So let's start off. When it comes to partnerships, a lot of partnerships fail because those difficult conversations were not had. There are a lot of people who come together, they like each other, they know that they're like solid together as friends, they shake hands, they go into business. But nothing was put in place for who makes decisions on what, right? So there are a lot of these difficult conversations that were not had early on in the start of the partnership that down the road really messes up the partnership, unfortunately, right? And so today, let's talk about some of those things. And I want you, if you're currently thinking about a partnership, you're thinking about going into a partnership, there are three questions that I really want you to ask yourself, right? The first thing is, why do you even need a partner? Why do you even need a partner? Let's start with that. And let me explain why. For the most part, why people want to go into a partnership is generally because one person has the skill set, the other person has the money. The person who doesn't have money at the start of their business, they look at a little bit of money like it's a lot of money. Guys, I'm talking because this is an area that I work in very, so it's near to my heart, and that's why I find it important that we talk about this. Okay. Now, you who has the skill set, you have a person who has the skill set. They're the ones with the personality. They know they're the ones that will be doing the work in the business. And then they have an investor who has $50,000. And they're like, okay, we're going into business. Investor or the other partner has 50% ownership. Then the person who will be doing the work has 50%. At the start, because the person who has the skill set doesn't have money, 50,000 looks like a lot of money. When they start to build the business and it starts to grow, there's a lot of work, a lot of sacrifices, lots of sleep, so many things that they go through mentally, physically, that when the business starts to make 500,000, I have to give somebody 250,000. So I always ask, why do you need a partner? Could you get a loan from the bank? That way, it's your responsibility. When you build this business, you're paying your loan. Guys, this is very important. I promise you. When people go in out of emotions or because of where they are without looking long term, what always happens, I promise you, is when long term comes, they are filled with regrets. I've only met probably in our community, probably only two business owners that have enjoyed their partnership, and we've talked behind the scenes and you see how well they work and why, because they had the difficult conversations and there was clarity. And another one where one person invested, but the person who invested came with additional resources like contacts, connections, contracts, where even the one doing the work knows that if they didn't have this person, outside of that, most people end up regretting partnerships, right? Even husbands and wives. But we talked about that. Today is not about husband and wives. This is about all partnerships. So always ask yourself, can I borrow this money from the bank? Or do I need to bring somebody as 50% of my business who is going to have to make decision on everything I do, even though I'm the one who knows exactly what I want to accomplish through this business? I'm not saying you should be greedy. No, I believe there's so much good in partnerships as well. People who come together with one vision, one goal, and they're able to put in equal effort and this business succeeds, I think is incredible. But for those who are starting out, you can't tell. So it's important that you ask these questions. Why do I really need a partnership? Is it for money or is it for skill set? Now, this goes to the second question. Are we both bringing equal or fair value to the table? You have some people that are so good in the back end, and when they partner with someone who is very good on the front end with things like marketing, sales, and all of that, their partnership is incredible. But if two of you are both back end people, not sales people, you're going to struggle because already back end people are going to struggle with decision making, right? Let me give you an example. I've done a group of beautiful women that were all interior design. They did event decor. I forgot how you call that. But guess what? They all have different things that they do when it comes to it. One does luxury, one does people with average budget. I've forgotten. Now, it sounds good for them to come into a partnership. The thing is, when you have three people that are good on the hands-on, but none of them is good with bringing in the clients or enough profit, they could hire someone. But at the start, amongst themselves, they didn't really need that because each of them could have done could still do just as well by themselves, right? So those are the things we ask each other. Do we bring enough value that gives us a reason to want to go into this for such a long time? Okay. And then the third thing you want to ask yourself is, could I hire someone to do this work, or do I really need them? Because sometimes you need an employee, not a partner. There are some people that are better off coming in, being hired, or not just hire someone. Could you hire that person? You pay them, but let them go. Let them not be a part of the core of your business. Because whatever might be your reason for going to business, it might be so near and dear to your heart that they may not get that vision. And if they're not aligned with you in your vision, in your values, you're going to suffer. But they might be so good at what they do. All you could do is hire them. When you hire them, you pay their salary. You compensate them fair deal for the work that they are doing, but you don't have them make decisions on what you're doing with your business. I'll tell you, this is usually a big problem when people are not aligned in values. Okay. So I can give an example of myself. Because I love people the way I do, if I were to partner with someone who is very money driven, our values right there already have an issue. Because for me, business is ministry. Business is an act of worship to God. You see, it's so hard for me to transfer that to someone who may not be on the same page with me. You see? So if I partner with someone who is more on, I want to get the money, I want to do this, which there's nothing wrong with it. There'll be certain decisions that I need to hear from the Lord that they cannot get. So right then we're going to have issues. So ask yourself, can I hire this person to do this work instead of bringing them on as a partner? Because that's a marriage right there. Except it's not driven by law, it's driven by money. So now you get to decide, okay? And then, so once you have been able to get that, because what you need that clarity on your own. Once you're able to get that, then you can start to say, okay, now looking at this person, do I like them enough? Or if I went into this business, I can see a long-term relationship with them. Are their values aligned with mine? Because let's say if you're a guy and you're with a business partner who cheats on his wife, I'm telling you, they're going to cheat on you one day. Just know that, okay? Because you think they can cheat on their life partner, the person who can, if they were dying, will be on the hospital bed, and then it's you that don't know. So you have to think, and it's again, if you cheat, you guys cheat together, it's good. But I'm just saying, if you're someone who doesn't cheat, but you're bringing on someone who cheats, yeah, some people tell me it's not the same thing, but I promise you, I've seen it happen. I've been doing this long enough. Eventually, they will cheat on you. Okay. So those are the questions now you ask out. What are our value systems? So maybe you've gone through this, right? You've seen that, okay, me and this person were bringing good value for the business. Me and this person, I don't need to hire the person who can partner. You've clarified, but then you have to know, what are our value systems? What are the things we stand for? What do we believe? When we think long term, are we on the same page? I'm doing this for my kids. What are they doing this for? To sell and exit at some point, or to pass it on to their next generations? Because if you're not having these conversations and thinking like that, you're going to have issues. Okay. So now, once we've gotten all this out of the way, the next conversation we need to have is ownership. Not every business needs to be 50-50. Just know that, guys. Some businesses can be 60-40, can be 35-65. It all depends on what each person is bringing to the table. And that's why it becomes crucial that you're having a conversation with someone like myself or a lawyer to know how to value what each person is bringing. Okay. So if someone's skill set is one that is of high value, where if you guys were paying for the person's time as a partner, we're paying that person as an employee, but they're coming as a partner, Maybe, and if the business is heavy on what they do, maybe they should have a higher percentage ownership, right? Like, let's say I partnered with someone who is a medical practitioner. Now, I'm the one with the idea and the money, for example, but they're the one with the skill set. Without them, there's no business. Maybe I can be okay to say, okay, you're the 70% owner, I'm the 30% owner, and I'm fine. But it's important that your value, that your ownership comes down to what each person is bringing to the table. Because if you don't have that clarity, it's going to come back to haunt you. Now, this influences a lot of things, from decision making to work that is done, how you hold each other accountable, and all of those kind of things. But we'll come to that. So you need to be able to ensure that ownership reflects the value each person is bringing. Guys, if you're going to partnership this video, because it's going to save your life, okay? Then and next thing, and just a few things like examples. If someone is asking me what's an example, I already said expertise. If the business is heavily reliant on that, on the service that person is providing, those are some of the things you can look into. And then the money part to it, if you guys are bringing money, because there are some businesses that you might be coming to invest with your money and hire people. So if I'm bringing in 35,000 and my other partner is bringing in 65,000, it's only fair that we can do our ownership based on our investment into the business. So you can do that as well. Okay. Then, guys, once you had some of these major agreements, the thing that I want you to work on is your operating agreement. I'm not going to go a lot into this because I want to talk about structuring, but your operating agreement is going to be the document that will save you. Even if you're married, you need to have an operating agreement, because the operating agreement is going to outline so many things. It's going to cover things like, your ownership, who makes, decisions, your voting rights. If you were to go to the bank to get money, how much can one person get without the other, right? Back in the days when couples would get divorced, someone would just run to the bank or have issues and clear the account. Now banks don't do that. Ownership, business partnerships, whether couples, individuals, they need to know what's the limit that one person can withdraw without the other person. And that's great. So you get to set some of these limits there. You have to think about like things like, how are you going to resolve issues, right? If I wanted to walk away from the business, what does that look like? Do we dissolve it? If one of us got into an accident and I was disabled, and the other person is the only one who has to carry on the business, what does that look like? What if one partner dies? Do you give their stuff to their family members, or do you sell the business? What happens? You want to think, and then if you were married, if you got divorced, what happens to the business? So these are the different things that you want to be able to cover in your operating agreement. You don't want to leave this to chance, please. You want to cover all these things. And then even your exit strategy. What's our long-term plan? Do we plan to give this to our kids? Do we plan to keep this? You want to be having those conversations, right? You don't want to wait until something goes wrong, then you talk about it. So next thing you want to do is do your operating agreement, and even think about like buying or selling down the road, and those kind of stuff. Now, the next thing I want you to ask yourself is, how are we going to compensate each other? All right. If you're watching this, partnerships, right? When you set up a partnership with someone, if we just shook hands, will be called a general partnership. Or in business, like if me and you came into business and we shook hands and we say we want to make money and share profits or losses, we're in business without registering anything. Okay. But they'll call us a general partnership. It means both of us are liable for anything that goes wrong in the business. Very important. But now, if we decided to register our business for tax purposes, let's say we got an LLC, a multi-member LLC, they call us members. Okay. So when we're members in our partnership, we're still what? We're still in business. We could be two members that are involved in making decisions and running the business. That's what we call us general partners, all right, in the business. But what happens is when we make decisions, when we run our business the way we do, when we file taxes, we file what we call a 1065. And then we would issue each other a share of our profits or losses on a form called a Schedule K1. On this Schedule K1, each person would take their profit to their personal taxes, and they will be able, and they would pay self-employment taxes on their profit if they were both active in running the business. If one person just invested money and was silent, their own profit is treated as passive income. It's not active. That's for another day. Why am I explaining this? It's very important too that you as a business, as partners in a business, decide what you're going to compensate each other beyond your profit. So don't just say we're going to split profit. That sounds good, especially if we did an investment. But what if I'm the one who is working in the business? Don't I deserve a salary? Don't I deserve to be paid for my time? Because if you are just the investor and I'm the one running the business, I cannot wait until there's a profit. I still need to get paid because I'm doing the work, right? So because of this, you want to have that conversation is, what are we going to pay for work that is being done? Most of the time when people come to us, especially people in the home healthcare space, that's the area we see that they missed out having a conversation on. So you have someone who spends a lot of time seeing patients, but there was no agreement on what their compensation would be. So you know what happens? It starts to cause resentment. And then the person doesn't want to show up to work anymore. Or they're like, I'm picking up all the load, the other person is not, but we're going to split profit 50-50. So the one of the ways you want to make it fair is, how will we compensate each other for the work that is being done? You see what I'm saying? Now, one person could be doing bookkeeping for the company. If you were to hire someone to do bookkeeping, maybe you would have to pay, let's say, $300 a month or $200. Now, if your partner is doing it, could you guys have some level of compensation for the person, especially if it's taking them a lot of time outside of their regular work? You want to have these conversations, not wait until later. Now, when it comes to these different ways of compensation, we have what we call, you can have a salary, we have what they call guaranteed payments. That's usually what we use with partnerships. And I'm not going to go into that, not for this one, because we don't have a lot of time. But then there's also your profits that you guys take based on your ownership at the end of the year. And then there are all these different things. But I want to talk about the compensation, what we call guaranteed payments. The guaranteed payment is that agreement of, for the work you're doing, this is what you're going to get compensated on. Now, you guys remember when I talk about the S Corp and I say when you become an S Corp, you're telling the IRS you want your business to be separate from you, the owner, and you can be hired as an employee. Unfortunately, partners are not treated, partners in partnership are not necessarily treated as separate from their business. So partners don't get a W-2 income as employees because they are partners and they are members. So when you're a member who owns the business, you're not separate from the business. Does that make sense, you guys? Guys, you know I get so excited talking about these things, but I hope it helps someone. So partners generally, when they agree on a compensation, that's what we call a guaranteed payment. But if a partner wanted to be treated as an employee of the business, you know what they're going to do? They're going to do an S Corp election. And then the partnership now becomes an S Corp, and the S Corp can hire the partners, pay them a salary, and the payment is a business deduction to the business. What is the differentiating element here is how payroll tax will be treated. So a partner in a partnership, when they get guaranteed payment, is still treated as self-employment income, and they pay taxes on that, okay, on their personal taxes. So kind of how I already said, partners in a partnership, their profit goes to their personal taxes and they pay self-employment taxes on their profits. When they become an S Corp, the S Corp will pay them a salary, be able to write that off, and they will only take their distributions to their personal taxes and pay income taxes on that. Okay, I don't like to get technical on these because I know sometimes it can bore people off, but I hope that this helps. And at some point when you start a business, maybe you're not in a partnership yet, when you start one, I want you to come back to this video because these things now will start to make a lot more sense. All right. So definitely something to talk about. And then a big thing now that I also want you to make sure you have a conversation with your partner is, what are you guys both contributing or bringing to the table? I think I talked about that before, but don't forget, are you bringing cash? Are you bringing capital? Maybe I might have a business building I want to give as my contribution or my investment in our business. Are you bringing in intellectual property? Are you bringing in skill sets? Those are those things we want to talk about so we can put a value to it. That's very, very important. All right. And then I think the last one that you have to decide on is who makes decisions on what. I may have touched on that briefly, but hear me out. Don't wait until you're in business to decide who makes decisions on hiring, who makes decision on your social media, who makes decision on firing. You will not believe the things that can happen when you had not have those conversations. And this should be around a person with the expertise. So if you have a partner that is really great with marketing, don't come in the way and start to argue every decision they make about marketing or how they're promoting the business. You want to make that decision on, this is what we would do. when it comes to this, and this person will make the decisions and we will respect it, we'll do the investment. Okay, so definitely something to keep in mind. Now those are the things we'll talk about. Let's go in now into our structuring. See, I've already been touching on this as I was going. You were following, I'm sure you'd have picked up already a couple of things. So when it comes to structuring your partnership, there are different ways you can structure your partnership. The very first one is where you have two people shake hands and they don't register anything. In the eyes of the IRS, you're still a partnership. You're going to file taxes on the 1065. We call you a general partnership. And it's like a sole proprietor. It's like two sole proprietors that came into business, shook hands, and then started a business. So it doesn't mean you must register an LLC or a partnership at the Secretary of State to go into business. No, we can have a verbal agreement, shake hands, we're in. But there can be problems for that, because if something went wrong and they sued us, they can come for our personal stuff. I talked about that a lot last week. If you watch that for the sole proprietor, that relates a lot to this. Okay, now what's one of the ways you can also structure? You can go in and actually register yourself as a limited liability company, a limited liability partnership. I know that I'm out of town already, so I can't break it down in detail, but the reason you register these entities now is to give yourself some protection. So in case somebody wanted to sue, the person cannot sue past what is in the business, unless there was, proof that somebody went out of their way to commit fraud. But if something happened like an error in the ordinary course of business, don't generally come for the business. I mentioned last week, if you're in a partnership, when you sign a document, please make sure that you sign and put what your title is, because you're signing on behalf of your business, not on you personally. Just some things to think about. All right. So we want to definitely get that registered. And when we register as an LLC, we are called a multi-member LLC. As a multi-member LLC, you set up your partnership. You can definitely you can have general partner. You generally, every partnership, most partnerships, not all, is changed over the years. But you always want a general partner who is in charge of making decisions, at least one. Okay. Now you can have other limited partners who put in the money and they are protected in case something went wrong, because they are not the ones making the decisions. But you always need to have a general partner. Unfortunately, the general partner is the one that must pay self-employment taxes on their income. Okay, so you can go into your partnership being structured as a multi-member LLC. You still file your taxes on the 1065 form, and everybody will get their share of profit or loss on a Schedule K1. Now, if you guys decided that no, well, all the partners are working so hard in the business, which is very common in service space like home healthcare. You hear me say home healthcare because we have a lot of partnerships in that space. Then you want to put them on salary. Okay, because maybe you have two partners that are both nurse practitioners. They're putting in the time. You want to put them on salary, because now the company is able to pay them, do the payroll tax withholdings and all of that. And it's also a deduction to the business. In order to do that, you want to make an S Corp election. At that point in time now, the partnership is operating as a separate entity from the owners, the shareholders, the members that happen to be working in the business. Right? So they are providing a service, they're getting paid a salary for their work, but if there's a profit left, they still take their share of profit to their personal, or losses to their personal taxes. That's the third one. And then the last one, you can have your partnership tax. So remember, I did all of these things I'm talking about taxes as a C corporation. So you could set up a partnership, which is a multi-member partnership, LLC, and then you have someone who maybe wants to be a part of it, but the person is not a US citizen, or the person doesn't meet certain requirements. And something I need to point out, with the S Corp, you can only have 100 shareholders, and they all have to be US residents. But if you had someone that wanted to join your partnership, but they are not based here, you can choose to be treated as a C corporation, and you would still have your partnership now being taxed as a C corporation and operating, and function, even though it's a partnership, but you're able to have other partners that are not here in the US. Okay, so these are the different ways that you can structure it. Especially, just remember, if you're a general partnership with handshake or a multi-member LLC partnership, you will pay self-employment taxes on your profits, any profit you take, unless you are a silent partner whose profit gets treated as passive income. Okay, if you want to be paid, and now if you have to get paid for your work, you'll be paid, your payment will be would be a term guaranteed payment. Now, if you wanted to get a salary for your work, you're better off making the S Corp election. So that way you're paid a salary that your business can write off. But in addition to that, you're still getting your profits home and only paying income tax on the profit. And then the last one, if you happen to have maybe other partners that are not based in the US, you can be treated as a C corporation for tax purposes. In order to be treated as an S Corp or C Corp for tax purposes, you do have to be registered as an LLC. Okay, so those are the different ways you can have your entity, your partnership structured for tax purposes. And of course, I'm always here to provide even more guidance if you need it. There are a lot more entity structures. Don't get me wrong, this is not it. There are a lot more, but you start with the basics. And if you need additional help, I'm more than happy to do that. You can always reach out to us at www.arcnps.com or email us at info@arcnps.com. You guys know I also offer complimentary 15-minute meetings to give you clarity if you need any answers to questions that are very specific to your situation, but you don't want to put it out in public. I'm always happy. Take advantage of that. Okay, it's on the screen. You take that. You're not going to have a lot of CPAs that know a thing or two like me doing something like this, but I do it because this is my gift to the business community, to individual taxpayers, to nonprofits. It's my own gift. I told you guys, this is ministry for me. I show up here and I'm so excited to share what I know with you. I'm so grateful that God allowed me to be in this space where I have a bit of understanding and I can help to simplify things and help you guys, get on track or build something that would outlive you. So thank you so much for joining today. As you guys already know, we do reruns on this. I will check in with the team if there are any questions. I know I ran a little bit over time, but these topics were so good and it was important that I at least did it justice. So I don't think I can even take any. So yes, thank you all so much for joining. This is Dr. Lilly Mbinglo, your favorite, your one and only Abacus finest and smartest CPA, tax alchemist, tax strategist extraordinaire, all of the titles. Okay, I'm laughing because I don't like to be bragging over here. I just have fun with all of these things. But thank you. I'm always grateful to be of service. Oh yeah, that was my recent award. Look at that. I became a master expert in finance. Number 1 thought leader in finance. Look, you guys, I know I need to humble myself sometimes. I know I'm humble. Sorry. I was trying to say I need to brag on myself sometimes. Yes, I need to brag on myself sometimes. I forget. I don't even keep up. Sometimes I see some of these awards coming. I'm like, oh, look at us. So I need to brag on some of these things, right? Because I need to make sure that all of you, my cousins, that your cousin is winning for all of us here. Just a reminder to everyone, we came again number 1 CPA firm in all of Chesapeake. What an honor. Thank you all for giving us opportunities to keep serving you guys from the bottom of my heart. Thank you. This doesn't happen just by coming out here and looking cute. It happens by providing good service, and it happens by having people that support you the way all of you do. If you're new here, when you hear me say cousin, is because we're cousin on the you're my cousin on the Facebook side, and I'm so honored that we are paths great to cross and we can impact each other this way. All right. Thank you all so much for being here. It's your one and only, and I'm going to be checking out. Please enjoy the weekend. It's 4th of July, by the way. Happy 4th of July. USA is 250 years old. What? I'm so glad it's happening in my lifetime, because by the time it turns 500, none of us here will be alive. So make sure you enjoy this time, okay? One last shout out to my husband for my standing desk. As you can see, I'm just jumping because sometimes I need to contain my joy, and then standing definitely helps. All right, you guys. Bye. Thank you so much.